Good evening, everyone, and welcome to another edition of the Market Pulse by Softlogic Stockbrokers. Today, we want to do things a little different, and that is, we want to look back at some of the reports we've released and look at how the recommendation has been compared to the realities of the market. So, essentially, what we're going to do is dive into some of the key counters that have already achieved the first target price that we placed on it and see how things have been going since then. So to kick things off, let's go over to Natashi. So Natashi, when we are looking at CCS, that's a report that I believe we did last year. How has it been so far?
So yes, CCS has been one of our top picks because this counter continuously performed, and because of that there has been some investor sentiment for the counter. So when you look at the financial performance as of the latest financial year, what we can see is with the economic recovery situation of the country and with the disposable income also rising, CCS has performed in terms of their manufacturing business and in terms of their carbonated soft drinks. So specifically under manufacturing business, because we know that they've got into this partnership with the Reliance Industries. So that is for the carbonated soft drinks. And both of their frozen confectionery and CSD segments have performed in terms of having double-digit volume growths. And when you look at the supermarket business, what we can say is that this segment too has performed in terms of having higher footfall growths as well as in terms of their same-store sales. So because of that, their margins have expanded, and we're expecting this momentum to continue, because the company is intending to actually expand the number of outlets, and with that we are expecting that this supermarket business would be lucrative going forward as well. And manufacturing business too, they'll have some more focus on the impulse range of frozen confectionery, so that would actually bode well for their margins, because we know impulse range is kind of a premium product range. So yeah, so coupled with all these key reasons, I think CCS will continue to perform going forward.
We definitely hope so. and I think looking at that particular industry, another key counter that we would like to cover is Sunshine, because Sunshine is also a company that we did a report on early last year. So Prince, just take us through Sunshine. How has things been? How has the performance been? And how has the conditions been like?
Yeah, so when it comes to Sunshine, I think Sunshine has performed really well in FY25 comparing with the FY24. So when it comes to the healthcare segment in the Sunshine, so if we specifically focus on the Lena manufacturing segment, so they secured the next government order for calendar year 2025, and as a result of successfully completed on in calendar year 24. And specifically, if we consider about this manufacturing segment, what we observe is they achieved 62%, basically double-digit growth in this manufacturing segment. So actually, this Lena manufacturing segment, especially focusing on meter dose inhalers. So they performed really well in these segments. So when it comes to the consumer segment, if you move focusing on the product like Zesta, what we can see here is we can observe the volume growth aligning with the country's economic recovery. And when it comes to the agri segment, now we can see here is the palm oil prices now so slowly starting to increase. So as a result of these major points and major catalysts, we can expect good growth in next financial year from the Sunshine.
Thanks, Prince. So remaining broadly in the food and beverage segment, let's also move on to another counter that was in our coverage that sometimes tends to fly under the radar but actually delivers exceptional returns, and that is actually Distilleries. So Chamika, would you like to take us through Distilleries, how it has been and how the conditions have been changing?
Sure. So when I was doing the Distilleries report, when I was published the report, prices was around 39, and my target price was 45.2 to be exact, and prices was almost 97% achieved this past few months. And if you look at the sector, if you look at the tariff, there has been a significant impact on a tariff with the government is imposing direct taxes for the alcohol products. So if you look at the tariff rates that has been implemented by the government, that has a major impact on the prices. And if you look at the volumes that has been there has been a significant small increase in this quarter, last quarter. But so even the tariff has increased, people kept drinking because of the inelastic demand of the product. But even though tariff has increased, so because of tariffs have increased, there has been an increase in illicit market also. But government has been taking initiatives to reduce this impact for the companies like Distilleries. And also with that and also we can, if you look at the construction sector, that has been taking a pace during these past few months. And from that we can expect the increase of the buying power of the main customer of these who are the construction workers, blue collar workers. And because of this increase in buying power of the construction sector workers, that has led to increase in volumes of distilleries, and despite these price appreciations that has taken place. And if you look at the Heineken acquisition that Distillery has done, from that also we can see the Distillery's market penetration was increasing. And overall we are positive on Distillery.
That's a very interesting point, Shamika, because I think a lot of people, when you see that the taxes increasing on alcohol products, tend to be quite worried. But I think you mentioned a very interesting point there, which is, yes, you have taxes increasing, but you also have the market demand conditions also significantly improving. And when you look at construction or other segments that blue collar workers are in, I think that is also a very important area and very important aspect to track in this entire situation. And talking about sectors that are recovering, tourism. Ravin, what is your take in terms of tourism? And especially, I think we focused initially on tourism as a whole, but later on we were looking at Ahun in particular. So how has that been?
So if you look at Ahun, so we published a report on Ahun last year November with a target price of 81.3 rupees. So this was achieved back in December. So looking at the counter, right now it is the off season for tourism sector counters like Ahun. So the opportunity for these counters will come in a few months. And talking about the counter specifically, so this is the market leader in hospitality sector in terms of number of rooms. With they have room count around 2,676, and also with winter season coming in, Ahun will have their revenue growth. Will have a revenue growth as well. And one interesting thing to note is that even though more than half of Ahun's rooms are in Sri Lanka, most of their revenue is mainly generated from overseas, the Maldives now. And when we look at Sri Lanka's tourism industry as well, we can see that year to date, our arrivals has passed 1.1 million arrivals. So SLTDA has also specified a tourist arrivals target around 3 million. So overall, we are positive on tourism industry. So what we believe is that Ahun is right in the middle of it and is ready to grow.
Thanks, Ravi. And I think I need to kind of push one more question to your direction, and that is with regard to everything that is going on, let's say, to a certain extent in the Middle East. Because there's also a bit of concern as to how would that impact tourism and whatnot. So what would your response be to that? Where is Sri Lanka in terms of its seasons now, and how might the impact be?
So right now for tourism, it's the off season.
Okay.
So I think from September onwards, we will expect high tourist arrivals. So Middle East crisis also, I think for a country like us, it would be an advantage. That's what I believe. So yeah, in September onwards, we can see a high revenue for these tourism sector counters.
So it's essentially the core season that we're targeting, which is going to make all the difference.
Yeah.
Right? Yeah. So having a look at that, I think another key sector that we have to focus on, that is not bound to see a recovery and to certain extents have seen a recovery, is also the construction sector and construction materials. In that light, I think Chamika, you look at one of the key counters in that, which is Tokyo. How has Tokyo been, and what is the story that we see now?
So yeah, if you look at the Tokyo, when I was publishing the report, target price was at 65 for voting and 57 for non-voting, and target price was his December last year. And if you look at the cement prices, that have been increased higher prices during February 2022, and that was around 3,200 level. But currently there was at now the prices was at 2,200 levels, and with that we can expect volumes to grow with the lower prices in place. And if you look at the CBSL aspect, CBSL has been cutting the rates down. From that we can expect this home builders loan rate also to go down. With that we can expect more construction project to come into the line, and with that we can expect also the drive in the volumes of the Tokyo, and these lower interest rates results in lower finance cost of the company as well. And if you look at the recently they have done a capacity increment in Tokyo Trincomalee plant, and that has resulted in a higher volumes manufacturing in their plant. So now the capacity of Tokyo Trincomalee plant has 4 metric tons. So with that we can expect to increase volumes and as well as the revenue. The top line will anyway goes up, and operational cost will also be maintained significantly, and the company will continue to perform well.
Quite interesting, and I think another thing that we also have to factor into most of these things is also remittances, because previously if you look at how the remittance trends have been, you have also seen a lot of people working overseas to also come back and build houses, and that has also played a key role in construction. So I think now with the remittances also recovering to almost pre-crisis levels, even this is post-currency depreciation, I think that too is going to help the industry on top of, I think, the many points that you discussed. But I think apart from that, there is also a couple of counters that we can look at, which are a bit more specific too. In fact, if you look at also JAT that is involved in the paint and coating industry, that too is a counter that not only might do well with construction, but also has a very interesting story. So Natasha, would you like to take us through JAT?
Yeah, so JAT, as you said, the construction sector sentiment actually bodes well for JAT. So I'm not going to get into details of the construction sector as a whole, because there's so much of interesting things to talk about JAT. So the strategy right now for JAT is in terms of cost reductions and margin expansion. So specifically when you look at the financial year's performance, what we can see is the revenue growth is actually marginal. Now, it's not because the company has not performed. This is mainly because the revenue from Bangladesh has seen a notable drop, like around 26%. So, amidst that, still the company has performed in terms of having a marginal revenue growth. But because their costs have reduced, their margins, specifically the GP margin, has expanded, like from 29% in FY24 for 35% in financial year 25. So that's a notable improvement in their margins, and we expect this to continue going forward as well. And the strategy behind this is backward vertical integration. So we know they have a plant in Sri Lanka, a plant in Bangladesh. So Sri Lankan market is mainly for the water-based wood coatings, and the key raw ingredient for this is binder. So now they're in-house, now they're producing their own binder, which actually bodes well for their cost reductions. And when you look at Bangladeshi market, it is mainly for solvent-based wood coatings, and the key raw material for that is alkyd resin. And now they get it from their own subsidiary in Bangladesh, which also another way of cost reduction. So that is why they've been able to reduce their costs so much, and they are going forward as well. They're looking into doing more of that backward vertical integration. So we know they have their UV based products. So UV based product is actually a highly margin product because it's a kind of a premium product. So what they're going to do is, all this time they were kind of importing these products. Now they're going to do it in-house, locally producing. So they're saying that it will bode well for their cost reductions, but still this is in R&D stage. So we expect with the finalization of this as well, that would actually contribute for the company's performance. And another key interesting segment is the EV segment for JAT. It is a new segment for the company. So they have a confirmed pipeline of around 2,000 home chargers for BYD. And with expected demand for electric vehicles going forward, we expect that this segment might also contribute well for the company's performance.
So that's actually very interesting because when you look at electric vehicles, this has never been a major consideration for us. But if you look at the market today, yes, you have John Keel's bringing BYD, you have charging stations potentially being provided by JAT, you have Brown's looking at various other alternatives. So it's starting to become a very pertinent point even in Sri Lanka, and it's very interesting to see how these things play out. But before we go into that, I think there's also one other company that we need to look at, which has had a evolving story over the past couple of years. It's a company that has been relatively resilient to the crisis, whilst also seeing some major impacts, and I think that is CIC. So Prince, tell us a bit about CIC and how the company has been and where it is now.
Yeah, I think actually CIC is a very good counter with a good potential in this situation. So I think I should mention about Israel and Iran conflicts. Now the things are stabilizing gradually. Now the oil prices, natural gas prices, and the urea prices also stabilizing. And so if you dig down to their segments, so now the water tanks are full across the country now, and a result of that, farmers gaining more confidence on the farming. And what we observe is the fertilizer market is a bit competitive. So, and now the government directly send that subsidy to the farmers, and government increased that subsidy to 15,000 to 25,000. As a result of that, now farmers can directly buy the fertilizer from the open market, and as a result of that, there is a huge competition. So producing and providing high quality and also the cheap products is a very it's create the competitive edge to the counter, I think. And CIC working on special blended fertilizer to penetrate this new market situation. And when it comes to livestock solution, and now the CIC doing well in this segment because the demand for poultry is stable, and still the poultry is the cheapest product in the market for protein. And specifically when it comes to the agri produce, now people are considering buy low IG rice. There's a huge demand for these products because people can now consider about their health because of this low IG. The sugar level, sugar impact to the body is really low. And also there's a huge demand for these products from the tourism segment. So, and also Ravi, you mentioned about the tourism segment. Now the numbers are gradually increasing. So as a result of these main catalysts, I think the numbers will be good in next financial years for CIC.
Thanks, Prince. And in fact, I think you mentioned that particular product. Yes, I'm a consumer of that too. So it's very interesting to see, and a recent consumer of that. So it's interesting to see how things would progress and how the popularity of that would also grow in the coming period. So actually, quickly taking a look back at a counter that we almost missed out on, which is RCL. Yes, Ravini, why don't you give us a brief update on that?
So for RCL, the target price is not yet met, but we are positive on tile sector. So if you look at the counter, RCL has a market share around 40% in Sri Lanka's tile market. So the construction sector is also picking up thanks to low interest rates. So which means more homes, more buildings, and more demand for tiles. So which is very beneficial for RCL. And also RCL is also stepping into exporting. So they are mainly looking into USA, Australia, and Indian markets. And there's also earnings coming from Elfin. And if in the event anti-dumping law is implemented, RCL would be a beneficiary from that as well. So overall, we are positive on tile sector. And for RCL, our target price is also around 51.5 rupees.
So thank you, Ravini, for that analysis. And I think it's very interesting as we look at some of the reports that we have published. You see some reports actually achieving its target prices quite soon. Some are almost at the edge of achieving its target prices, and sometimes they are far surpassed it. And we put follow-ups as we revise target prices upwards. And I think in all of these things, it's very important to analyze and realize what are the counters that are going to do well, especially when markets start to recover. And being able to capture the right counters as the market recovers is one of the key things that we would be looking at. It's relevant now more than ever because you're seeing the ASPI hit its all-time high, 17,750, roughly 60 towards the end of the day. And especially in this context, you might sometimes see counters which have a recommendation above its all-time high. But then when the ASPI itself is going to its all-time high, I mean, it's only natural that some of these counters also see that kind of move. So in this kind of dynamic, it's always important to go in depth into this research and understand the processes and the nitty-gritties behind what drives companies' growth. And so I believe this little analysis or this basic discussion that we've had also is a bit of an introduction into some of our analysts and the various aspects that they look at before publishing, let's say, a note or a report for any one of their counters. And I think as you look at even Sri Lanka right now, it had come up in quite a few conversations, which is the economic aspects are also quite significant. We also discussed about how the Middle East crisis can have some impacts on various counters. And it's very important for us to always understand that, yes, the Middle East crisis exists, yes, global conditions exist, but also we have to look at where Sri Lanka is. Because if you look at it a couple of years ago, the world was recovering, but Sri Lanka was going into a crisis. And then the performance of some of these counters or the market wasn't as great as what you wanted it to be. But now you look at Sri Lanka actually undertaking this entire reform momentum, and Sri Lanka standing up quite strong despite the world going through certain difficulties. In fact, if you look at last year, 2024, if you look at forecasts done by the World Bank, the IMF, ADB, most of these international organizations, their expectations for Sri Lanka's GDP was quite low. Some of these organizations revised it up multiple times, but still Sri Lanka hit a 5% GDP growth, which was significantly higher than what anyone was expecting. And even if you look at 2025 this year, you're looking at, and the World Bank forecast is 3.5%, and for the first quarter we've hit 4.8%, which is in line with what it has been over the last few quarters. So clearly Sri Lanka is performing at a different pace. And if we can continue, I think some of this reform momentum, and if recovery continues to grow, I would very much argue that our market also does have a lot of potential going forward. So with that, anyway, we have interesting times to come. We also have the Trump tariffs that has kind of flown under the radar, which would probably come over the next few months again, which we would have to focus in detail. But until then, we encourage you to follow our research and stay tuned for any new updates that we bring on the market. With that, thank you all for joining in, and we hope to catch you next time. Thank you.